What are the options on finance available for purchasing a new home? What do you do and who do you approach if you're stuck with some problem related to investing in real estate? That's precisely what we're discussing today on Property Hotline. Hello and welcome. I'm Kavita Krishnan and we're answering all your home finance queries today with Harsh Roongta. Harsh is a SEBI registered investment advisor. Harsh, welcome to the show.
Thank you. It's a real pleasure, Kavita.
So let's get started with Himanshu's question. Now, Harsh, Himanshu got a plot allotted to him through a lottery system from the BDA in Bengaluru. Now, he wants to know whether he's eligible for a loan to fund the plot purchase. Can I borrow this jointly? My wife is a housewife, he says. I'm a government employee. His wife obviously has no source of income over here. She's a homemaker. Can he go for a joint loan and will he get loan to buy a plot of land?
So, I think let's answer the second question first. Can you get a loan to buy a plot? The answer is that plot loans are more restrictive than regular home loans. But because this plot is being bought from a development authority, which is the Bangalore Development Authority, he should be able to get a loan to buy the plot. That will typically be available from almost all the major lenders who are active. The only issue is the plot loans will be more expensive than a regular home loan. So typically about 1 to 1.5% more expensive. So if a home loan is 8.5%, your plot loan is going to be 9.5 to 10%. The down payment would be higher, 30 to 35% versus the 20 to 25% that is there in a home loan. If you are planning to actually construct there quickly, then I think you would be much better off taking what is called a composite loan, a loan to buy the plot and to construct on it. That is treated exactly like a home loan with the same kind of margins and same kind of down payment requirements, same kind of rates. Additionally, if your household income is less than 18 lakhs and the house that you are building is up to a certain size and you don't already own a house and your wife doesn't own a house, then please remember you might also be eligible for the subsidy that is available under the Prime Minister's Awas Yojana. So check that out. That's quite substantial.
This is the MIG scheme, the PMAY. There are two different schemes.
Absolutely, the
there's
MIG
one for EWS LIG, there's one for MIG. Now you also interestingly suggested, when you gave the suggestion of the composite loan, you also said if you intend to build that house immediately. What does that mean? Is this does this come with a time period or a expiry date?
Yeah, so you have clients who try to be too clever, who say that we'll take the lower rate and the lower down payment and take a home loan but not build. They are essentially speculating on a plot loan. For them, I think the agreement contains a clause that they would have to start the construction and complete it within a time frame. I think typically 6 months to a year. And if they don't do it, then there would be a penalty in terms of higher interest, etc. Also, the bank has a right to recall the loan. So I would not advise you to try and hoodwink the bank just to get a small interest rate drop.
So there you go, Himanshu. If you are intending to build a home immediately on that plot of land, then you can actually go for a composite home loan, like Harsh pointed out. Also, depending on the size of the home and the amount of money that you're paying for the plot and for the construction of the home, you might just be eligible for the PMAY MIG scheme. But do remember, both of these come with an expiry date, which means you need to build the home within a stipulated period of time if you want to avail the benefit of the lower interest rate and the lower down payment on the home loan and the PMAY MIG scheme. Moving on to Pramod's question now. He says that he applied to LIC Housing for a home loan of 20 lakh rupees to purchase a newly built up flat in Bandra. Now, LIC Housing is telling him, find a guarantor on his behalf. He wants to know, why should I find a separate guarantor since the property will be under the bank as mortgage? Harsh?
Well, this is a very common question. People feel that if I am giving so much security, why does the bank insist on checking my income? In this case, they are asking for a guarantor. I think let everybody realize that the bank is not going to decide the loan amount, or the loan decision is not going to be made on the fact that you have given a security. Because in India, to reclaim a mortgaged property, sell it off and reclaim your loan amount is a very difficult, expensive, time consuming process. Therefore, whilst the security of the mortgage is quite valuable for the bank, in that the client cannot sell it, the borrower cannot sell the property, and also over time, should things go terribly wrong, the bank will be able to recover its money. But still, the primary thing that the bank looks at is the cash flow of the borrower, from where it can expect regular payments. Now, in your particular case, it is possible that you may not have enough of an income to justify the loan amount that you are looking for, and that is why LIC is insisting on a guarantor. There are plenty of other providers. I mean, this is a competitive market. If you think you have enough income and are able to show it, then there will be other providers in the market who might be willing to give it to you without a guarantor. Again, in your case, again, I just want to again point out that please look, when you are deciding on your lender, please ensure that if you are eligible for the PMAY MIG scheme, which means again your household income is less than 18 lakhs, neither you nor your spouse is already owning a pakka house anywhere in India, and your house is within that 1000 or 1200 square feet carpet limit, I think please make sure that you get it. It's a very substantial amount of money.
Right, so that is something that you need to keep in mind, that you ensure that you avail of the PMAY MIG benefit, which has been announced very, very recently. But you know, Harsh, another thing that we should be discussing over here, what is the responsibility of the guarantor? What is the liability, in fact, of the guarantor in this case for a home loan? If I sign on as a guarantor for someone, what does that mean? Say the person is unable to pay off that home loan, then what happens to me?
Well, if you are a guarantor, essentially you are borrowing the money and lending it to the borrower. Please remember that you are completely responsible. If there is a delay in payment of that loan, then your credit, the guarantor's credit record, is going to be spoiled as well, and it is going to go on the guarantor's credit record. So if a friend or a relative is asking you to be a guarantor, be sure the question to ask is, are you willing to borrow money to lend to him? And if you are, agree to become a guarantor. If you are not, do not agree. Please remember, it is going to affect your own ability to borrow in the future. So keep all that in mind.
Not just the ability to borrow. Now you are saying that in effect I am borrowing to lend to somebody else.
Absolutely.
That's the way the bank looks at it. Does it also mean that if this person is unable to pay off the loan, then I have to repay that loan?
Oh, absolutely. I thought that is the English definition of guarantor. Otherwise, what else is a guarantor supposed to do? So, he is guaranteeing the repayment. Absolutely.
So that's something that you really need to keep in mind before you sign on that paper as a guarantor for a friend, for a relative, for a sibling. Do remember that essentially what you're doing is taking the loan from the bank and telling the bank that, you know, hey, I stand guarantee that this person will pay back the loan, and if this person doesn't pay back the loan, I will pay it back, and it will also impact my credit score.
And you can't take a stance that first try and recover from him, only if the main borrower doesn't pay, I will pay. That is not a stance you are allowed to take under the law. The bank has full right to proceed against the guarantor without even proceeding against the main borrower.
So very clearly, you should not be emotional when you take a decision to sign on as a guarantor for anybody's loan. Ashutosh's question next, he says, I took a home loan to buy an under construction home. Now the loan disbursement was done in 6 installments over an interval of 6 months. Now from when should I calculate the 5-year timeline for the tax rebate?
Okay, so it's just pick the financial year in which the first disbursement of the loan happened. So, I mean, as an example, suppose it happened in June 2012. That financial year is therefore 12-13, ended on March 31st, 2013. 5 years from there is March 31, 2018. So, if the first disbursement was in June 2012, then the 5-year period ends on March 31, 2018. Please remember that this 5-year period affects only self-occupied property. If you are giving it out on rent, there is no restriction in terms of allowability of interest based on the period of construction. It's only in a self-occupied property, the maximum deduction is limited to 2 lakhs if provided it is within this 5-year period, or it is 30,000 if it is more than this 5-year period.
Right. And with that, let's move on to Purva's question now. Purva says that she stays in an apartment. I have no loan or any other liabilities. Now, if I buy an apartment in the future and opt for a loan, can I also avail IT benefits for the same? Also, when I do move to another house, should I rent out this home, sell it, or keep it vacant? Now, that shouldn't really be decided by your tax treatment of the money you're paying, right?
Absolutely. The second question is, it's a financial asset you are talking about, and what to do with the financial asset is a decision much larger than just the tax. Tax only helps you improve the return on your financial asset, any tax breaks. So I think whether to rent it, keep it vacant, sell it, those are things that you decide along with your financial advisor, along with your investment advisor. Look at the assets that you have, what percentage is in real estate, what percentage is in equity, what percentage is in debt, what are your needs, what are your requirements, what's your risk profile. I think depending on all that, that's a decision that you would take. The first question, if she buys another property and takes a loan to buy that second property, absolutely that interest would be deductible for that property. And if that property is going to be self-occupied, then that interest deduction is limited to 2 lakh rupees. It does not matter that she already has another house which is already owned by her. If that house stays vacant, then on that house she can't have 2 self-occupied properties. So there would be some tax implications, but to get deductions on interest, if you have taken a home loan to acquire a property, that interest is deductible from the rent. That is available for as many properties as you own. It is not restricted to a single property. Just remember one thing though, with the recent amendment now in the budget 2017, the maximum loss from house property that you can set off against other income is now restricted to 2 lakhs. Everything else gets carried forward.
Right. So essentially, what Harsh is trying to tell you here, Purva, is that you should not really be looking at the taxes or the tax deductions that you get when you decide to buy into property or when you decide to sell property. Buying or selling a home is an investment decision. It is a decision that you are making as you're looking at real estate as an asset class, and you should not really look at it from the point of view of tax deductions. Now, Krupa says that she wants to buy a 3 BHK home in Mumbai or Pune or Bengaluru by 2018. How much should I be earning by this period so that I can get a loan with a tenure of 15 to 20 years? Also, how much savings should I have set aside for the same? She's taken 3 very varied markets here: Mumbai, Pune and Bangalore.
And where in Mumbai, where in Pune,
Exactly.
Where in Bangalore? I mean, even if you take the most expensive market out of the 3, which is Mumbai, you probably might get a 3 BHK in Virar at 50, 60, 70 lakhs versus, I mean,
Harsh, what if we work with a 1 crore budget of 1 crore rupees?
Okay.
Maybe she won't have too many options in Mumbai, but she will get options in Pune, she will get options in Bangalore.
So fair enough.
So you have a 1 crore budget and you have a 2018 target. So basis that, if you work it backwards, what would be your advice?
So I think if you set that as a thumb rule, essentially to get a 1 crore loan, your house should typically cost, I mean, you would have a minimum 25% down payment. So typically it would cost around on paper, at least without the stamp duty and registration, it should at least cost about 130, 140. That is one, to be able to eligible for a 1 crore loan. The property cost should not be less than 140 on paper. On the agreement value should not be less than 140. That's one. Two, to get a loan of 1 crore, typically your annual income should not be less than 22-23 lakhs a year. So that is provided you have no other loans and you have a good credit track record. So to get a 1 crore loan, as I said, the property should be minimum, agreement value should be minimum of 1.4. Your salary in 2 years time should be 22 to 23 lakhs. Those are two things, and you should have accumulated the down payment, right? 140 is the agreement value. You would have to in addition pay another say 10 lakhs stamp duty, registration, so that 40-50 lakhs down payment you should have accumulated. If the values are higher, these values will correspondingly be higher. If the values are lower, these values will correspondingly be lower.
And Krupa, also remember that the 1 crore, and don't get spooked by the number, 1 crore is the higher end that we are essentially looking for. Of course, if you set your heart on buying a home in Mumbai, then you need to be prepared for something in the range of 80 lakhs to 1 crore rupees. Otherwise, if you're looking at Pune and Bangalore for that matter, then there are properties that are available in the 50 lakh, 60 lakh, 70 lakh range as well. So you essentially, it should be a function of your income and a function of where you work. That is a place where you should be looking to buy a home. Harsh, very quickly, we need...
I think you should reverse this. Depending on what you earn, you prepare a budget. Don't do this reverse. I think your budget, your house should cost roughly 5 times your annual income, all told.
Right. And look at your annual income at this point in time. So whatever comes your way later will be a bonus. We'll slip into a short break now, but Property Hotline will continue on the other side. Do stay tuned. Welcome back. You're watching Property Hotline. We're discussing home finance queries on the show today, and Harsh Roongta is in the studio. Harsh, Saurabh has sent in a question, and he says that I'm an NRI working in Qatar. My family is based in Cochin and I want to buy a 3 BHK house in Mumbai through an NRI loan. Is appointing a power of attorney mandatory for an NRI home loan? I don't have any relatives in Mumbai to appoint as POAs and my permanent address is in Cochin. Will these factors have any adverse effect on my home loan process? With banks going digital, can't his POA live in Cochin?
Oh, absolutely. And first of all, just let's take a quick look at why a power of attorney is needed. A power of attorney is not to buy the property or they sell the property. It is basically to sign the loan documents, etc. with the bank. So if the NRI himself is in India at the time when the loan is being processed, he need not even have a power of attorney holder. And very obviously, the power of attorney holder can be in Cochin. Even though the property is in Bombay, he should apply in Cochin, where his home address is. And there will be plenty of lenders who are willing to take those applications.
So what Harsh is essentially saying over here is that you can live in the US, you can have family in Cochin, you can buy a property in Mumbai, and you can apply for that home loan in Cochin itself. So your parents or whoever are the relatives who are living over in Cochin do not need to keep traveling back and forth.
Oh, absolutely. They don't need to travel. In this day and age, everything is available as a doorstep service. At least from the private lenders. So that is something that the client would need to decide.
Right. So all you need to do is ensure that all your documents are in place. That's the only thing that the banks really ask for nowadays. Otherwise, I don't think this should be a problem. The fact that you're somewhere else and your family is somewhere else. Ritesh says that my home is going into redevelopment in the next 2 months. However, I want to move to a different location and want money for the value of the flat up front. Now, my friend has offered to buy the flat for the same amount that the builder is giving in the same timeline. Can he get a home loan for such a transaction? Do banks give loans for a transaction like this? What requirements must be fulfilled if he needs such a loan?
So I think for redevelopment properties, lenders are very, very clear. They don't lend. And the reason is very, very simple. Redevelopment processes are hugely time consuming and almost with indefinite timelines. You cannot think of a single redevelopment project that has worked on schedule. and banks don't like that kind of an uncertainty, and therefore if the society has already slipped into the redevelopment mode, the redeveloper has been appointed, then there will be no loan available. Simply because when the society's NOC is required, they will have to mention the fact that this we have already gone into, we have appointed a redeveloper, etc. In fact, if the society goes into redevelopment after a loan has been given, many times the loan needs to be repaid, and that is another issue that arises. So if the property is going into redevelopment, it is going to be very difficult for your friend to be able to get a loan. However, one way to do this is if he has some other property as a security, which is free, he can use that property as a security and give that as a security, take a loan to buy this property, he'll still get it at the regular home loan rate. So via medias are available, but the redevelopment property as a security.
But again, this is an option that the bank should be offering you, right? The one that you just said.
Yeah, so again, if you seek
offer
professional advice, I think these are some of the via medias that you will be offered. But very clearly, the redevelopment property as a security, unfortunately, will not give you a loan.
Right. Also, Harsh, very quickly, there are some banks like, cooperative banks over here, which are funding societies that are going in for self-redevelopment.
Right.
If this is one such property, then will that bank give a loan to his friend?
It could, because it's already taking a risk. It's already taking a risk on the project. In fact, that bank is ideal to give his friend a loan. And logically, that society, that bank should definitely give him a loan.
Right. So hopefully, if you are in such a project, then it should not be a problem. Otherwise, of course, it's very, very difficult for you to get a home loan for a redevelopment property. Kumar writes in and says, I took a loan for 2 homes. I claimed tax deductions on my first home under section 24. Now, it was self-occupied. Currently, I wish to put the first home on rent and occupy the second home. Can I claim tax deduction on the second home? The rules for that has changed.
Yeah, but he could have always claimed deduction on both homes, even earlier. And that situation continues to be the same. The only thing that has changed is that if his home number 1 was self-occupied, then the limit of 2 lakhs applied on home number 1. Now that home number 2 is self-occupied, the limit of 2 lakhs will apply on home number 2. Another thing that has changed from this year, this financial year, 2017-18, is that the overall loss from income from house property, maximum of 2 lakhs, all properties put together, maximum of 2 lakhs can be allowed to be set off against your other income. Any other loss over and above 2 lakhs will have to be carried forward and set off against income from house property in future years. So I think definitely the benefit, the supposed benefit available for interest deduction, the quantum has been reduced dramatically.
Right, so you cannot avail the limitless deductions that you were getting on property that was deemed to be let out, which a lot of people were doing till last year. Komal says that he wants to take a home loan and book a flat in pre-launch. He doesn't want to opt for pre-EMI. Is it possible for him to start his EMI after possession and pay the interest and the principal amount together? How will the bank collect interest from me after I start paying EMI? Will the bank charge him extra interest if he takes this option?
I think there's a lot of confusion here. First of all, if it is a pre-launch, no bank is going to give him a loan. So, and please, don't buy in pre-launch, that too with a loan. Okay, so please don't buy anything in pre-launch. 1. 2, suppose it is after launch and you do get a loan. If there is an arrangement between the bank and the builder, there might be an arrangement where during the construction period or for some portion of the construction period, the pre-EMI interest is borne by the builder. In which case, you give your down payment and then start paying interest or the EMIs only after that period is over. But please remember, even in those arrangements, if the builder defaults, your liability to the bank remains. So, those are things that you need to keep in mind before you decide to buy.
Right, you need to keep all of those in mind, but there was something that Harsh brought up a lot today, and that was the PMAY MIG scheme, or the scheme announced for the middle income group. Very quickly, let's give you a rundown of what that scheme is. This was announced by the government on the 1st of January, and it is valid for a year, which means it will be valid till the 1st of January 2018. Now, if you have an annual income of 6 to 12 lakh rupees, that is per year, in that case, you are eligible for the scheme. This is the MIG-1 scheme, where you will get a subsidy up to 9 lakh rupees on a home which measures up to 90 square meters, which is around 90 square foot, Harsh?
930 square feet.
930 square feet.
Carpet.
930 square feet in carpet again. There's also an MIG-2 scheme, which is for people earning between 12 to 15 lakh rupees per annum. Here you are eligible to get a subsidy of up to 12 lakh rupees on your home loan on a flat that measures around 110 square meters, which means a little over 1,000 square feet. So those are the parameters under which you can, of course, claim those subsidies. 9 lakh rupees, 12 lakh rupees, not to be sneezed at. So if you are buying a home, you need to buy that home in this year, right, Harsh?
Yes, it is. Scheme is valid for 1 year. Please remember, only 1800 crores or 1500 crores has been provided. That's roughly 60,000 loans going out fast, and the subsidy amount is 2.3 lakhs, roughly 2.3 lakhs to 2.35 lakhs. The 12 lakh or the 18 lakh is the income limit. The actual subsidy you get is roughly 2.3 lakhs.
So even then, 2.3 lakhs is not a small amount.
Not to be sneezed at.
That is something that you need to keep in mind if you are planning to buy a home in this year. And like Harsh just told you, those home loans are going out very, very fast. So make the decision fast. With that, we come to an end of this episode of Property Hotline. Harsh, thank you very much for coming in, answering all those questions. And of course, any question on real estate, do send it in and we'll get the country's biggest experts to answer them. Thank you for watching.